Hi, this is Dan Smith of DPS Legal Counsel. Welcome to today's podcast on Einstein's theory of taxability, right, where I discuss issues involving taxes and how they impact the operation of small businesses and self-employed individuals. Today I want to talk about non-filed tax returns. It sometimes happens that individuals and businesses fail to file the required tax returns when they are due. Non-filed tax returns can be a big problem for both individuals and small businesses. There are a number of reasons why all individuals, all businesses should always file their tax returns on time, even if they are unable to pay the tax shown on the return. First of all, the statute of limitations on the Internal Revenue Service's ability to assess tax doesn't begin to run until a tax return is filed. So typically the IRS has only 3 years within which to assess additional taxes that might be owed when a tax return is filed. So if there is an audit or a review of a tax return and the Internal Revenue Service believes that more tax should be paid based on the situation for the taxpayer, they typically have only 3 years from the time the return is filed in order to assess that additional tax. Now, there are always exceptions to the rules in the law, and that holds true with tax law as well. For example, if there is a substantial understatement of the tax owed, and in certain other cases, the 3-year period of assessment, statute of limitations on assessment, is not 3 years, but the period is then lengthened to 6 years. And if fraud is involved, there is no statute of limitations on assessment. But typically, there is a 3-year period on assessment, and so, but that doesn't begin to run until a tax return is filed. So that's one reason to always file a tax return, even if you are unable to pay the tax shown on the return. Another reason is there is a 10-year, again, typically a 10-year statute of limitations on collection, but again, you need to be filing tax returns. Finally, there are potential criminal penalties involved for willful failure to file tax returns. Now, it's not typically the case that the Internal Revenue Service pursues criminal charges against non-filers. Certainly not in all cases. If someone is not filing tax returns and there are significant amounts that would otherwise be paid or be owing, and depending on the situation, if is the taxpayer a high-level person, would this be the kind of person or business that the Internal Revenue Service and the government would like to make an example of to deter other people from failing to file taxes? That could all play into the decision whether or not to pursue criminal charges against a non-filer. But typically non-filing results in civil issues for the non-filer more often than criminal charges. But there are statutes that do make it a criminal offense for willful failure to file tax returns. Now, let's say that a business or an individual has failed to file tax returns for a number of years, but wishes to file the returns and get back into compliance with the Internal Revenue Service. The question often arises, how many years of tax returns should that person or that company file in order to get back in the good graces and into compliance with the Internal Revenue Service? There's no simple answer to that, but I can give some general ground rules or boundaries to that question in order to kind of give a little bit of information that might be helpful generally to someone who is wondering how many years do I need to file in order to get into compliance. You have to look at it from two perspectives. One, the civil side of things, the exposure for owing money and having a collection enforcement action brought against you. That's one side. The other side is the criminal side. How long does the Internal Revenue Service have to bring a criminal charge for the willful non-filing of a tax return? So let's look at the criminal side first. Under Section 6531 of the Internal Revenue Code, the Internal Revenue Service, or the government, essentially has 6 years after the due date of a return in order to bring criminal charges against someone, or either a person or a business, for willful non-filing of a tax return. 6 years after the due date of the return. So, in order to bring a non-filer into a situation that would eliminate the possibility of a criminal charge being brought against that person or that company, that person or company would need to make sure that all tax returns that would have been due within the past 6 years are filed. Returns that would have been due more than 6 years, although they might pose a civil problem, and we'll get to that in a moment, if the returns for the past 6 years have been filed, and no return would have been due 6 years or less from the time that we're looking at, then the Section 6531 should provide some comfort to that person or that business that a criminal charge, at least, is not in the offing, because there is a statute of limitations that specifically provides that no charges can be brought for non-filing, for willful non-filing of a tax return, unless the charges are brought 6 years or less from the due date of the return which was not filed. So we'll start with the premise that you would need to file at least the last 6 years of returns. We'd have to look at the actual dates to see when the due date was for a particular return, but as a rule of thumb, 6 years, which should be the starting point to make sure that returns have been filed. Now, on the civil side, there is an IRS policy, which is Policy 5-133, which has been published generally in the Internal Revenue Manual at Section 1.2.14.1.18. And this policy of the Internal Revenue Service is similar to the statute that puts a 6-year time frame on the statute of limitations for criminal charges. This policy, which would apply to civil enforcement, collection of money from a taxpayer, is that generally 6 years of past due returns, 6 years of non-filing returns that are then filed, typically would bring the taxpayer into compliance. Now, this is a policy, but it's not a hard and fast rule. So in certain cases, the Internal Revenue Service might very well require a non-filing taxpayer to get into civil compliance and to avoid enforcement actions, collection of money, to file more than 6 years of returns. There are a number of factors the Internal Revenue Service looks at in this instance. One is the prior history of non-compliance by the taxpayer, whether the taxpayer has income from illegal sources, whether there would be an effect on voluntary compliance if more than 6 years were required. The anticipated revenue that would flow to the government if more than 6 years were required. Now, I'll stop here for a second and just comment. If you have a situation where a non-filer has a large would have a large tax liability for an old year, let's say one that's 8 or 9 or 10 years ago, the Internal Revenue Service might very well require that taxpayer to file that return as well in order to get into its good graces and not be um, not be subject to enforcement actions for non-filing. And then lastly, the service looks at special circumstances. That's sort of a catch-all where the service they can look at just basically anything it wants to determine whether it should go back further than 6 years. Going back more than 6 years does require management approval at the IRS. So the rule of thumb generally is that 6 years of filing 6 years of non-filed returns that are then filed should cover both criminal and civil aspects of a non-filer's case, although you have to caveat that by saying that it's possible under certain circumstances that more than 6 years of returns would have to be filed. All right, I hope that helps. If you have any questions, please feel free to let me know, and we'll see you next time.